All of us may like to borrow at some point or the other, at least those of us who dream big, when those dreams don't fit into the tiny wallet of us. Borrowing is not a sin, it is just that we have to make it an informed decision. When we take that money from our family, relatives, friends, bank, and the briefcase wala to set up the next big business, and if that business fails to generate income, we could get bankrupt. So, borrowing is about having a good understanding of what is the income that we might generate tomorrow. Because when we borrow, we spend tomorrow's income today. We always intend to repay our borrowings, but we always may not. Sometimes we borrow from friends. We tell them that we will repay as soon as we get our incomes. But when we get the income, there are other uses, and we take our friends for granted. But in the formal borrowing market, a bank, a finance company, or a finance institution might not lend to us just on the basis of a promise. They want to be sure that we will repay the money. So they will ask, before they give their money, whether you have put your own money in. How much of your stake is in the business, in the property, or in the asset for which you want to borrow. And they will want to check you out on two things. Are you able to repay? Are you willing to repay? Unless they're convinced, they're very unlikely to lend you money. How will someone find out whether you are able to repay your loan? There are two ways of doing this. The first one is to look at your income tax returns and look at your income statements or pay slips that come from your employers. You have to establish to the bank that you have a steady future income from which you will be able to repay the money that you have borrowed. The other way of doing this is to take an asset of yours and offer it to the bank or the finance company as a collateral. So you're borrowing against something which has value, and in case you do not repay, the bank is able to use this asset, this property, and sell it off and take the money that is due to them. Your willingness to pay for a very long time remained just a promise that you made. But today, it has become formalized. We have something called the credit score, which is today available to check your credit history. Have you been a willful defaulter? Is something that your bank or finance company can check. There was a time when you took a credit card, forgot to pay, went to another bank and got another credit card. Or you took an educational loan, conveniently forgot to pay it, but you still got a home loan. But today it's not possible because your lenders have come together. Banks, finance companies, institutions, all of these who lend to you have joined together to create a credit bureau. This credit bureau holds your loan history. So a bank, before lending to you, will simply go and check with the bureau what your track record has been. If you had payments which you did not make, if you had loans that you conveniently forgot, very likely that you will be classified a willful defaulter to whom a loan will not be available. So, borrowing depends on whether you have had past good behavior. So, when you go to the bank to borrow, the bank is going to ask you for all your documents, and the bank is going to determine how much loan you are eligible for. But what you must remember is that the bank does not know what you spend. The bank also does not know what are the other loans and commitments you have. So based on your income, the bank may be willing to give you a nice big sum as a loan. What you have to do is to see whether you can service such a loan or not. As a thumb rule, if a loan is going to make up more than 40% of your regular income, I think you might be getting into trouble. And then the question of the rate at which the bank will lend it to you. Now this will depend on so many factors such as whether the loan is secured or unsecured, and whether your credit score is good or bad, and whether the asset you are offering is of good quality or not. So the bank will determine how much loan to give you based on what is the asset you are offering them and whether the asset can be sold off to recover the loan in case you don't pay. Where you have no asset to offer, like a personal loan or a credit card loan, the rate is likely to be high. And where your credit score is bad, the bank may turn you down or offer you a loan only at a high rate. So finally, the loan that you would take is a matter of negotiation between you and the bank and your ability to convince the bank that you are a good quality borrower.